What's up, everybody? Welcome back. Doing an end of the week recap for portfolio. Basically, as you can see, for the end of the week, we did end up almost a little bit up over 1%, 786. Not too bad. Almost $88 in dividends so far for the week. So it's not too bad in terms of dividends. We're up 300, almost 368, like I said last time. For the month, we're doing well, 30, almost 3,400. I also wanted to say on my last video, I talked a little bit about Moderna and of course some other things related to being careful where you place your money. And of course, I don't want people to even think for a second that of course I haven't done any of this research. And so this was another article that I had just finished reading. I got this stupid pop-up now talking about partnerships and how this individual right here, who is the CEO, Moderna's top leaders, sold company stock as share value skyrocketed, right? This was back from September. Bad optics or something more? Moderna executives stock sales raise concerns, and then of course Bank of America downgrades over concerns of valuation. And of course you can Google a lot of this information. It's available there. There's a couple of articles talking about this, that, and the other. And then of course the last one was what I said about crypto, right? China freezes crypto traders' bank accounts, and then of course you can look back up here and you'll see a 4 billion worth of crypto seized. There was another 200 or almost 300,000 of crypto that were seized. So if you actually just Google some of this stuff, right? China seizes Bitcoin bank accounts, you'll see what's been going on in China. And then of course China basically peddles this stuff to Americans. Like I said, China is basically just a hustler. This is what they do. They're all about whatever they can sell to America. America going to sit here and they're going to print out money. And then of course Americans are going to buy Chinese products. And then China is going to come back and then start using those dollars to expand their empire and buy real assets while you guys get stuck with Bitcoin. So for like I said in my last video, what I was talking about, so far we're not doing too bad. Hoping to get this to 70,000 by the end of the month. My goal, of course, is to get to 500 a month in passive income, right? That's basically the goal. Of course, I track all of that with dividendtracker.com. And so I can look at my portfolio. I can see who is a little bit undervalued, which stocks are currently, like, in my opinion, a little bit overvalued, and I would wait for pullbacks. And so, like I said before, where I'm going to be placing my money probably for the next 2 months, I want to allocate about another, I'd say about 10, I would say at least 10 to maybe 15K in food stocks. From what I have read, and especially if you've been paying attention to what was going on in Texas, as a result of the cold, a lot of crops were destroyed. And if you just go on search engines like DuckDuckGo and then just type in food shortages and then look at the different countries that are experiencing food shortages, pay attention and type in like different companies that are stating that they're going to have to raise their prices, or the whole $15. If that actually get passed, the only thing that businesses can do is of course raise their prices to be able to make up the difference. And so for me, where I'll be allocating my money, currently I believe the two that I'm in are FLO, which basically does like bakery goods. They do a lot of bakery goods, a lot of breads and stuff, cakes. And so for me, I'll be allocating a little bit more, probably maybe like another 1,200 to this. It doesn't necessarily pay too big of a dividend, but I kind of like to have layers of dividends. So I have some, obviously the safer the stock is, the less you're going to receive in terms of dividend. If you're chasing yield, then of course you want to allocate a little bit less to those that have high yields because they're more risky, right? A lot of those companies are paying like 7, 8, 9. Like for example, T pays 7%. ExxonMobil, because of where it was, as you can see, the yield of course is going down now that the stock price has gone up. But of course, when I was buying it, when I was telling people in my video that I was going to be buying ExxonMobil, it was yielding like 8%, right? So my yield on cost is around 8% because I got in all the way down here, and now we're sitting at $52. From everything that I have read and what you've seen with the Joe Biden administration, is that the narrative is going green. which means that oil is going to become more expensive as other places in the world start to reduce the amount of oil that they basically pump out into the system. And just like back in 2008, right, when during the financial crash of 2008, what happened? Where did oil go? Oil was like $100 a barrel. Gasoline, went to like $5 a gallon. So pay attention when you go to the pump. Are you seeing the prices? Are you seeing the prices of gasoline starting to rise? More than likely, you're going to see companies like, for example, ExxonMobil or Chevron that are going to benefit from the rise in costs. And this is just basically cyclical. Like when it comes to these sort of businesses, everybody gets a turn, right? Everybody gets a turn at the table, especially if you're part of the upper elite. They're going to be like, all right, your stock's going to go down for the next couple of years. This is where everybody's going to invest their money, which is why you're seeing all of a sudden the craze for things like, for example, renewables, which is why I'm probably going to be doubling my allocation to companies like BEP or SO, which deals with like electrical. They pay decent dividends. So I'll be adding a little bit more money. And this is basically going to be, what are we in February? So I'd say February, like March, April, June. Let's just say March, April, June. We'll allocate, let's just say 15,000. We'll allocate 15,000 to the portfolio. We'll say between 15 and 20. Let's just comfortably say between 15 and 20. We'll allocate some more money to renewables because that's the narrative. Everything is renewables. They're like shitting on oil while at the same time oil prices are going sky high. And of course, food stocks. And those would be like things like Kellogg. So we'll look at, for example, Kellogg is another one. It's got about a 4% yield. The stock is basically what looks like a little bit on the low end. Let's say over the past. So basically looking at Kellogg, you can see that we're kind of close to that 2012 year low. So I'm thinking I'm probably going to add some to stocks like Kellogg, BGS, which is another food source. I talked about this last time and all the different products that they order. Kellogg's is more like cereals and grains, whole oats. So they're a little bit more specialized. For example, also Coca-Cola. Coca-Cola looking to get into more like those little sports drinks for like the video gamers, like they have got like Red Bulls and stuff like that. What is it? G Fuel. And so for Coca-Cola's looking also coming like it's very near about that low, probably like right here, multi-year low from 2016. So we're seeing a little bit of a pullback, right? You should be able to see that right there. So basically we're coming down to that area. It was a good buy if you got in the 40s. I bought a little bit more when it came down here. I'll probably be adding more to see if we're going to come up to $60, but primarily I want it for the dividend. My account primarily focuses on passive income through dividends, and so my goal for the year is to get 500. At least that was my goal. I wanted a minimum of 500, which means I need to get to about that 100,000 mark, or about 6,000 in passive income. I'm currently at about 33 a year. I need to get to 6,000, and then of course that basically, when I divide it by 12, will get you to $500 a month in passive income for dividends. Primarily for me, because my goal is of course to live abroad, and then of course use the remainder of my money to buy real estate abroad. So I would say between KO, stocks like BGS, and perhaps General Mills. General Mills will see a little bit of a move. If General Mills pulls a little bit further down, maybe to like 51, 52, it pays a little bit of a yield. It's not crazy, but we could see, of course, capital gains to the upside, primarily because of food shortages. I would encourage you to look up, even here in New York, New Jersey are all talking about, especially places like Texas, a lot of these places that are hit by weather or have really shitty economies. Just a reality, they're going to end up experiencing food shortage. Oh, the other one was Tyson, right? Tyson for meat, especially because you got people like Bill Gates talking about, we want meat to be, we want all these wealthy companies to move over to like fake meat sort of nonsense, which is going to make meat by nature more expensive if they're trying to not subsidize it. I don't think that's going to happen, but if it does, you might get involved with things like Tattoo Chef. Tattoo Chef, of course, is another food company that also specializes in like that vegetable meat sort of nonsense. So this gives you a couple of ideas. Just pay attention to stock prices. Tattoo Chef has basically done nothing over the past several months except dip here. So if the stock were to come down here, it might be a good opportunity to load up. Currently, it's not doing anything because it's not on the radar. It's not on the radar by the powers that be that are like, all right, we're ready to move this stock up. Let's all invest. Kind of like ARK, right? Space was doing absolutely nothing. If you remember back here, Space was doing absolutely nothing. What's his name? The owner of the company, like, couldn't get it off the ground. Everybody was like, you know, everything was all about Elon Musk until ARK came in, and then ARK basically moved the company all the way up. Otherwise Space would have been dead in the water. This stock was doing absolutely nothing, like I said, until the powers that be say, okay, it's your turn, step up to the plate. We're going to move in, we're going to move this stock up, and then we're going to start dishing it out. You see the volume starts to come into the upside. And it's not like this. I mean, I think this is like $250,000 a ticket to go to space. Like the goal of the company is like not even realistic, or at the very least is like 15, 20 years into the future, where they're thinking that all these rich people are going to go out into space. They're going to pay 250 grand for a ticket to go out into space. But again, this is the narrative that is spun. And until someone in power comes across and says, okay, we're going to jump on board, stocks typically don't move anywhere, which is why I bought this thing down here in the 16s. I sold it when it moved into the 20s. Unfortunately, I didn't buy back into it, mostly because I really didn't see this thing going anywhere. Again, until the powers that be, and you got, what's her name, Kathy from ARK, and they're like, oh yeah, space is the wave of the future, and what does she call them? Sector disruptors and whatever bullshit that they want to utilize to try to get people to get into the sector. But I'm gonna leave it here. Like I said, that's basically what I'm going to be looking for. I'm going to be looking to allocate towards food companies, primarily because of there is an impact. You can Google it, right? Pandemic food shortages of 2020, 2021, and beyond. But they're saying that they're going to be food shortages. Pay attention to the prices that you're paying. Meat has gone up substantially. I went to the market and bought a box of cereal. It was like $7 for a box of cereal that previously was like $4. It was like $4, $4.50, $4.85, etc. And now when I go to the market, $6.99, and plus most of the boxes of cereal, unless you catch them on a sale, even some of the generic brands are still fairly expensive. And that's just the reality, is that most of these things are going to start to move as the cost of living starts to become more expensive. Once we start to see inflation in every day, to a little bit more. Most of the inflation that we're seeing is in stocks, certain stocks, right? Most of the stimulus that we're seeing is in the stock market, right? I mean, that's easily verifiable with a simple Google search. That, you know, most of the 600 or the 1200, whatever it is that they were going to be sending out, that a lot of that money went into the stock market, and of course a lot of the companies that received money. And so a lot of that inflation went into certain sectors within the market, typically in tech, or it went into, for example, real estate, right, with the really low, super low interest rates. And so all that does is it causes prices to go up, because now people who are selling realize that all these people have access to more money, so that everybody just starts outbidding each other because of the low interest rate. But if you're not paying attention to the 10-year yield, I encourage you to pay attention to the 10-year yield, and you'll see that the 10-year yield is slowly creeping up. But more importantly is the direction that it's going. And when the 10-year yield starts to go up, the market is more than likely going to come down. So I would pay close attention to your 10-year yield. But more importantly, if you don't see stimulus, and all the more reason the market is going to go down. If they're not coming in and getting involved more with the treasury market, then you know that the government is just kind of like letting it ride. And they've already said that they want to let things ride a little bit. Just pay attention. So like I said, that's typically where for the next 3 months, that's probably where I'm going to be allocating my money for the portfolio. And that will probably put me at about, let's just say, 80,000 or 90,000 for by the time we hit February or March, April, May, or by the time we hit May, we're looking to get to about 85 to 90,000 in the portfolio. That should put me around maybe like 380, 400 in terms of dividends. We'll see if we can push the 100K, and then probably if we get to this like June, if I get to the 100 mark, because I do plan on flying out to Colombia to buy some real estate. I've been looking online, and I'm probably going to end up spending a month out in Colombia, because it's not like here in America where you can kind of go online and there's tons of realtors and they'll show you. In Colombia, it's not like that. While there are realtors, for the most part, you got to look around, actually walk around into the areas, and which is what I did last time, and you'll see the little for sale signs or the for rent signs. And so I'll basically, probably going to end up spending a month out there, which I'll probably end up documenting while I'm out there what the Colombia real estate looks like for those who do want to live abroad, while of course still working here in America. That's basically going to be it. I'm going to leave it there. That's basically my weekly update. Like I said, for the portfolio for the week, wasn't too bad. We were up for the week, 786, doing well for the month so far at about 3,400 with about almost 368 in passive income. And I'll check out next time. Thanks for watching. If this is your first time here, be sure to subscribe so that you don't miss out on future content, and I'll check you out next time. Thanks for watching. Take care. God bless.